Hello and welcome to a fresh episode of Tech This Week, where we bring you up to speed with the most important weekly developments in the enterprise and emerging space in India. In today's episode, we will be talking about the week's mega deals and off-chart rise in valuations, expansion of shareholding at NPCI, the reworked draft e-commerce policy, the government's ban on 43 more apps from China, the country's IT industry as it loses its founding father, and Bitcoin's flash in the pan bull run. And today, joining us from the Tech Circle newsroom are my colleagues Payal Ganguly, Kunal Talgeri, and Debangana Ghosh. Hi guys, how has the week been so far?
Hey, it's been good.
Yeah, it's still going on.
Quite good.
Right.
Yeah.
Let's start off this week by discussing the elephant in terms of fundraising. Now I close my eyes for a second in this year, and the next thing I know, valuations have reached unicorn status, decacorn status, and doubling in a matter of months, or rather a month when it comes to Unacademy. And even the week's funding overall, right? It's gone up by 77% week on week to $309 million as of Friday evening.
Forget the edtechs. What was with Car24's $200 million fundraise this week? Well, to be fair, at least one or two other car marketplaces raised big money in 2020 to stay operationally robust.
Yeah, Debangana, I think it reminds me also of Droom, right? They had a major round of funding. Any others can you think of?
Yeah, Payal, it started in December 2019, actually. I think Car.Dekho had raised a $70 million round. That point of time, Car Trade had been out in the market, did a 40 or a $50 million round in May or June this year. And I think now Cars24 takes the cake, right? It's been a $200 million round with the company crossing the $1 billion valuation. It says Cars24 founders have said that they want to invest the capital in tech product innovation and enter new business verticals. I wonder what the capital's runway must be like.
Yeah, $200 million.
Also, it's probably the only used car marketplace in India to be a part of the Unicorn Club, right?
I'll have to check up on the Car.Dekho valuation. I think the thing is, Car.Dekho's fundraise happened just before COVID. So I don't know what the valuations are like post-COVID.
During COVID, the only two times that Car.Dekho was in news for this year was when it had a ESOP buyback, and another time when it trimmed certain few jobs, the company, in June or May, I think.
Right. I mean, in fact, I was looking at one of Droom's releases, and they also said that they were a unicorn, which we didn't find a way to ascertain it. But let's see how the valuations go in this space.
Even otherwise, if you have to move on, this week had seen a lot of momentum in early stage startup activity. And in fact, we had reported on two different startup accelerators this week. Of course, there was Sequoia's search, which has 17 startups to name, and 12 of them were Indian. And then there was SOSV's China Accelerator, which has 4 Indian startups. So each of these companies have raised different seed capital rounds over the past few weeks, or are continuing to raise.
To give us a quick status check on what are the broad sentiments prevailing through the sector, as we move towards December, we have with us Kashyap Chanchani, managing partner at the Rainmaker Group, which is a Mumbai-based investment bank specializing in VC deals and M&A closes.
Hi Kashyap, I hope all is well and thank you for making the time.
No problem, Supriya.
So this week in our reportage at Tech Circle, we reported some mega funding deals, upping valuations across sectors, whether it was Cars42 with its $200 million top-up, Unacademy with a new investor on its stable Tiger Global, or even payments gateway startup Cashtree that raised over $35 million. We also reported two different global startup accelerators, Sequoia Surge, and there was SSOV Accelerator. So I'm trying to get at is, at large, would you find a sense of sentiment picking up in the entire ecosystem and as we end the year soon?
Sure. So, Supriya, my thoughts here are that, last year, 2019, was a very bumper year for the venture ecosystem at large. And then, we had a pause for say 2 odd quarters when we were very, very badly affected by COVID. If I were to characterize the market in a pithy way, I would say 2019 was a caste system kind of market where, companies that were at the top, end, so to say, 25-30% odd companies, okay, they got funded rather aggressively, and for the others, it was a little bit of a struggle. I think 2020 and the first half of 2021 broadly would be like a king and surf market. Okay, so most rounds that, for instance, we are doing or we are seeing, they're all getting massively oversubscribed, and valuations tend to be fairly. They tend to be fairly flexible. Okay, so even in terms of the data that you have, funding that's happened, you'd see that disproportionately large number of these companies are large and established companies. Okay, companies that have touched $1 billion in valuation, or companies that are twice of that. Okay, and they are being supported by the broad macro thesis that has emerged after COVID. Okay, people are going to buy more used cars. Okay, there is a fundamental rating that's happening in edtech as a sector. So I think that is going to continue going forward. Our assessment at the beginning of the year was that growth would probably take a little bit of a pause, and early stage fundings will happen more aggressively. But it's exactly the opposite, because people have been tracking these assets for a very, very long time. Either they see a predictable outcome, that's why we put in our money there, or we're seeing a near-term liquidity event. So I think this trend of money being concentrated around fewer and fewer assets going forward is going to continue.
Okay, since you did touch on edtech, are there any sectors that are seeing more than robust interest apart from that sector? And if you could just identify which ones and why?
Sure, Supriya. So that's a good question. I would break into two archetypes. Okay, first is the sectors that are being positively supported by COVID. Okay, where the blinding glimpse would be obvious is sectors like edtech, sectors like content. On the other hand, across sectors. So across sectors, companies that have recovered, okay, from their February top line and bottom line. Okay. And people are seeing a predictable outcome, irrespective of the sectors that they're in, whether they are in lending or other areas which are probably considered kind of slow right now. I think companies that are demonstrating robust bottom line and are still growing, okay, irrespective of the sector, these rounds are getting oversubscribed. So I won't say that people are looking for a sectoral thesis here when it comes to growth investors. They are looking at companies that are showing a predictable outcome, more than certain sectors.
Yeah, which explains why perhaps Cast 24 was pleasantly surprising that way, no?
Yeah, so there it is a question of A, the theme being right, B, the execution supporting the macro theme that's kind of playing out.
Okay, I guess that wraps it up for us. So thank you so much for joining us, Kashyap, and making the time out.
Thank you so much, Supriya. Take care.
Speaking of investments, NPCI seems to have concluded its private placement offering. The first time I saw it, it seemed pretty strange for the retail payments body to be doing this. No, Payal?
Well, it might be unforeseen, but it did not come as a surprise, really, Supriya, because RBI has time and again told NPCI to broad base its shareholding for better representation from all the regulated entities in the payment space, which includes digital wallets and payment gateway providers as well.
So who all joined NPCI through this offering?
Well, the players who join NPCI include new age entities also like Paytm Payments Bank, MobiKwik, as well as PhonePe, Amazon Pay, and PayU, among others. All in all, NPCI raised like 81.64 crore from 19 entities. It had made the initial private placement offer to around 133 entities. And at the conclusion of this, the total number of shareholders as on date in NPCI has gone up to 67. Even though the original 10 banks which had come together to form NPCI hold a little over 78% majority stake in the entity.
Since you mentioned Paytm Payments Bank, right? Remember earlier this week, there was this data sheet shared by NPC. I remember on the top 30 remitter banks and top 30 beneficiary banks. So I think Paytm, now that it's also the shareholder, it was also one of the top 5 beneficiary banks for NPCI's UPI offering in the month of October. Anyway,
I think it has
also
maintained that. Yeah, sorry.
Yeah.
Also, when we say that NPCI Amazon is taking a certain percentage of stake, we saw this news, I think last week or the week before that even Amazon and Google are looking to start a competing NUE against NPCI. So I wonder how this will work out.
Is that allowed?
Yeah.
I sound
Yes.
I don't. Oh, okay.
Yes, that's what the news has been about.
Okay.
Yeah. So NUA is basically a consortium of bank and payment players, right? So if you remember, even Infibeam kind of joined in to form to announce the first NUA. They're saying that Tata are also looking at setting up an entity similar to that, as is SBI.
On the policy front, we had more developments this week, right? With the draft e-commerce policy exclusive that Payal wrote, I think. Payal, do you have the details on that?
Yeah, Supriya. So looks like the draft is in the final stages of approval, with a source who told us that the government would like to bring it out before the end of the calendar year. Also, what remains for DPI to do is to seek a final, look through by all the concerned ministries and departments. The highlight in the rework draft, if I might add, seems to be an emphasis on the Atmanirbhar Bharat initiative and taking MSMEs onto the digital platform. So it remains to be seen how that pans out in the final draft.
MSME reminds me, wasn't Alibaba's MSME platform banned recently?
Right.
Yes, it was a part of the 43 apps that were banned by MeitY recently, mostly Chinese in origin. As previously announced, the apps were banned for posing a threat to national sovereignty.
Yeah. What is the tally now?
Barring the light version of the initial list, I think they never made it public. The banning the light versions, but overall since June, it's now 220 apps. Most of them Chinese, and some of them are also Hong Kong based, etc.
That reminds me of an advertisement I saw yesterday on Mint, I guess. It was a front page ad by MobiKwik, which says that would you like to?
Yeah, they were taking a close pot shot on Paytm. Yeah, like 43 apps banned. Yeah.
Oh yeah, I mean, even the kind of press releases that these companies send us, it's the ban is just put in place, and then 5 minutes you have your inbox is flooded with everything that Indian companies have to say about the ban.
Yeah.
Will there be more investments coming in from Alibaba's end in the near future?
Looks like, Supriya, in one of their earnings call, the CEO had said that, they're waiting and watching the space, and, that they are in no hurry. So it's open to interpretation, I guess. What will be the next step in their interest in India?
Okay. Anyway, moving on Thursday afternoon, FC Kohli, widely regarded as the father of Indian IT, passed away aged 96. A number of tributes flowed in through the day for a gentleman who had the reputation of being a headmaster-like figure. Kunal, did you ever get to meet him? I want to know.
Fortunately, no. Though our editor Snigdha Sen Gupta interviewed him in 2001.
Oh.
Around the time, there was a lot of talk whether TCS would go in for an IPO, which it did 2 or 3 years after that. I have met S. Ramadurai, though, who was Kohli's successor and who's written this wonderful book called The TCS Story and Beyond. We ran excerpts from that book earlier today.
So what did you make of him, of Kohli?
An amazing life, right? In 1969, when he was brought into TCS, it was a startup that had to figure out its business model. It had early traction with Hindustan Aeronautics Limited, Nuclear Power Corporation of India, and even Delhi Development Authority. Kohli's insight was that A, TCS needed to up its revenue engine by looking at the US market. B, TCS needed to hire young graduates and make them into world-class programmers to code for clients sitting in America. That must have been by 1974. What do you know? It's a business model that's in play even today, 45 years later.
Right. I have also heard that he was a stickler for discipline, Kunal. Is that true?
That's right, Payal. But he invited the young techies to challenge his propositions. He began the tradition of hiring from India's premier engineering universities. He also taught periodically. And if he made an assertion, he always wanted to be challenged. So he had the reputation of being a wonderful listener, really ahead of his time.
Yeah. I wonder what's starting up at the heavens. Speaking of young techies, Bitcoin touched its highest price since 2017 on Wednesday last week. Its value was at the peak of over 19.5 thousand US dollars. When that's converted to in INR terms, that would be about 14.4 lakh rupees per Bitcoin. Now, what's caused this sudden rally in valuation? That too in the middle of a full-blown pandemic.
That's the interesting part, I would say. So what we have seen is that since January, the price has gone up almost over 140%, while we saw the other asset classes like stocks and real estate prices crash pretty bad. So in fact, if we as of March, even Bitcoin's prices had dropped to as low as 3.6 lakhs sometime in March. But then from there on, the valuation started picking up. So what happened is in May, the third Bitcoin halving event happened. So this happens once in 4 months. So this time around, per block, the miners were able to mine 6.25 Bitcoins, which is half of what they did 4 years back, which was 12.5 Bitcoins. Post that, there were of course headline-worthy entries of the institutional investors in the West. The biggest of them was, of course, PayPal holding, allowing buying and selling of Bitcoins over its network. In fact, according to what I read, 5 days back, I guess, a few days back on this platform called Bitcoin.com. So PayPal has already bought 70% of the newly mined Bitcoins. But in India, if we see, the adoption has been very low and limited so far.
To tell us more on that, joining us on the podcast today is Rahul, who is the CEO of Zebpay, one of the earliest Bitcoin exchange startups in India.
Firstly, welcome to TechThisWeek podcast. So, Mr. Rahul, like we have seen in the last week, the Bitcoin prices have shot up, and as of today, it is way beyond what the numbers were back in 2017 peak. So, would like to ask you: are the valuations of Bitcoin, what we are witnessing right now, justified, and do you expect the growth momentum to sustain in the coming months?
Great. Well, thank you first for having us. We at Zebpay were very excited about the future of Bitcoin. I'd say, on is Bitcoin valuation justified? I'd say, if anything, Bitcoin's undervalued. I've been investing in Bitcoin for almost 8 years, and I'm more confident now within the technology and the, let's say, the ecosystem than I have ever been. I've written an article predicting that Bitcoin should reach 1 crore by 2030. So, in about less than 9 years, I think that the trend will continue. And if you read the technology and the ecosystem, I think most people would agree. Right? And so, at least on the Zebpay side, our momentum is continuing. We're seeing a lot of new users every day, thousands of downloads each day, and we just crossed over 1 billion rupees in fiat deposits.
So, since there's also this other factor of the Bitcoin halving, these cycles going on every 4 years, so what are the chances that the prices would fall in the coming months, or rather in a year's time?
So, even though I believe in Bitcoin for the long term, a la Warren Buffett, who I find is a mentor, it's too hard to predict the price in the short term. Like over the next 1, 2, 3 months, Bitcoin could easily drop by 20%, right? But it could also rise by 30-40%.
Thank you so much for joining us and giving out your time for the podcast.
So to add on a note of caution here, so despite the bullishness in the industry that we have been seeing, Bitcoin's valuation has already started slumping. As of yesterday's closing, it was down by $1,000 in the Asian trade market. So we are yet to see how it works out, and probably it will work out in the long term. That's what the industry experts have been saying.
Yeah. I mean, given the rate at which it's going, I hope in the time that we've recorded this podcast and it's up for publishing later this evening, don't see a lot of change. And with that, it's a wrap on this episode of Tech This Week. For more news and updates, stay logged in to techcircle.in. Be good, stay safe. Adios. Bye.